Hey, I'm Mindy Kinnis. This is The Daily Rage. First off, a huge welcome to those of you who are new. I know a lot of you just recently signed up for my webinar that's coming up this week. Super excited to see you there. And I wanted to let you know that I will be doing a live giveaway during that webinar. I'm going to be giving away my top 3 trading books. Now, I've read a lot of trading books, and these are my 3 favorites. You do need to be present to win though, so make sure that you mark your calendar now. It's Thursday, November 4th at 5 p.m. Pacific. That's 8 p.m. Eastern. Now, on to today's topic. I wanted to talk a little bit about how I strategically think about hitting my daily profit target. So my daily target is $300 a day. That does not mean that I make that every day. Some days I make more than that. Some days I make less than that. Some days I make negative, as you have seen if you've watched my previous videos. So, but 300 is what I am going for. So the way that I want to put a little bit of strategy around this is by using the average true range, or the ATR. So I'm going to talk specifically about the Russell and the Nasdaq with this because those are what I normally trade. So let's take the Russell first and foremost. The micro Russell, I'm going to be looking up here at my charts. The micro Russell, the ATR, or average true range, is 30, let's just call it 35 points. Now, when I say point, that could be $1 of movement. So if it goes 35 points, and I know that I am looking to get $300 on the micro, the multiplier for the futures contract is $5. So I would need it to move 60 points to reach my daily target of $300. That is 60-point movement times a $5 multiplier would be $300. That is asking a lot when the ATR is only 35. Now, yes, if I wanted to like write it up and write it down and write it up and write it down, I maybe could like eke that out, but that's a lot of work. And for those of you that know me, I like to keep things very, very simple. So instead, what I rather would do is look at the E-mini. That's like the biggie contract, the regular Russell. If you take a 35-point ATR, or average true range, with the biggie, the multiplier is 50 instead of 5, so 10 times as much. That means instead of 60-point movement, I only need 6 points of movement. Now, think about getting 6 points of movement in one direction or another. I don't care if it goes up or down. I will go long or go short. But I only need 6 points out of 35, which is the average. So that is a much more doable strategy than trying to eke out 60 points out of a 35 ATR. That doesn't make a whole lot of sense. Now let's talk about even more exciting numbers, which is if I wanted to make $1,000 a day, and those are my favorite days, I would only need 20 points of the movement with that E-mini Russell, because again, I'm multiplying by 50. So 20 points of movement times a $50 multiplier, that would be $1,000. And 20 points is still super doable within a 35-point ATR, especially on a day like today, because today the futures market just closed recently. It's just after 2 o'clock here in the Pacific time zone. And the range today was 57.8. That's almost double its ATR. That is so awesome. Like, way to go, small and mid caps in the Russell today. So great. So anyway, I was able to make my daily target this morning when I was trading, which is awesome. Now let's switch over and talk about the NAS. With the micro NAS, the multiplier for that is $2, which means if I want to make $300, I need at least 150 points of movement. Now, the ATR on the NAS is way bigger. The ATR on the NAS right now is 202. So out of 202 points, I would need 150 of those, choosing the right direction, to make my $300. But again, if we go up to the mini, or the biggie, I only need 15 because it's 10 times as powerful. Instead of a $2 multiplier, it's 20. So I would get 15 points of movement times $20 of multiplier. That would give me my $300 a day. And if I wanted to make $1,000 a day on the NAS, that's only 50 points of movement. And again, 50 points of movement out of 200 or so is not that hard. So that's some of the strategy that I think about when I'm looking at what to trade. Now, just for comparison's sake, let's talk about the Dow. I never trade the Dow because here's why. The Dow multiplier on the micro is only 50 cents. So if we take a 300 ATR, which the micro Dow is currently 300 for the average true range, if it only average moves $300 a day times 50-cent multiplier, that's only 150 bucks. And that's if I catch all of that move, which is fairly unlikely. So that to me does not give as much leverage as something like the Russell or like the NAS. And that is why I choose not to trade the Dow. So if you bring some of this strategy, I want you to think about like what's going to give you the best leverage for your time and also for your account size, of course. So think about like the micros versus the minis and determine based on the ATR, which one is going to be best for you. I'm Mindy Kinnis. Thanks so much for watching.